If you have money to invest and you keep thinking to yourself, what are the best investment opportunities that I should really focus on right now? Well, then this video is going to be perfect for you, because I'm going to show you the exact sectors where trillions of dollars are already flowing globally as the AI revolution transforms the global economy. And more importantly, I'll reveal to you how investors are positioning their investments into a specific number of ETFs so you can build yourself a diversified portfolio without trying to gamble on individual stocks. I'll also break down the top 3 sectors attracting an unseen level of institutional investment. I'll explain why the smart money is moving there. I'll show you how anyone can take immediate action, step by step, even if you're not an expert investor. And if you stay until the end, I'll give you my brand new free ebook with a full breakdown of all the sectors, all the ETFs, so you can start researching and investing immediately. So let's get into it. Now, before we break down the sectors, I think it's really important that we understand why you may feel a bit confused about where to invest your money. Because honestly, there is so much noise in the financial markets. Everywhere you look, someone's telling you, buy this stock, buy AI, buy gold, silver, buy oil. Then the news headlines report the war. Suddenly we have recession warnings. And for the average investor, trying to build a long-term, well-structured, diversified portfolio that can make money in all markets, it can feel a bit overwhelming trying to figure this all out. Like, what actually matters? Where is the smart money really flowing? And what investments actually have strong long-term potential? Because I don't want to gamble away all the money that I've worked so hard to build up. You want clarity, you want structure, and you want reasons that actually make sense. And if you have a rules-based framework that allows you to remove all the guesswork, you can invest with confidence without taking unnecessary risks. Now, the reality is that institutional investors are aggressively positioning themselves around one of the biggest technological transformations that we've seen in decades: artificial intelligence. The world's largest companies are spending trillions building out the infrastructure to power the AI revolution. Amazon, Microsoft, Meta, and Alphabet are expected to collectively spend $750 billion in 2026. That's 4 companies in one country. Globally, trillions more is flooding into this industry to build out this transformation. So this video will show you exactly where the real capital is flowing, so you have a clear roadmap of where to invest. Now, over the years, I've educated hundreds of traders and investors, and I've honestly spent thousands of hours studying macro mechanics, capital flows, and the sectors attracting long-term institutional investment. And one thing I've learned is the biggest wealth opportunities are usually created around global trends that force governments, corporations, and investors to rebuild infrastructure at scale. And that is exactly what we're witnessing with AI. So in this video, I want to simply give you a clearer perspective on the facts of where some of the biggest investment opportunities are developing so you can take instant action. So here's what we're going to be breaking down. The first sector we're going to look at is the AI infrastructure and semiconductor companies, because artificial intelligence isn't just a software story, it's a hardware, computing, and it's an infrastructure story. This is why an unprecedented level of money is flooding into specific ETFs that invest into the semiconductor companies. They manufacture the chips that power the language models for ChatGPT, Claude, and all of AI. And at the same time, even more money is going into the companies that will be building out the data centers, and these will house all the computers to run the technology. So think of semiconductors and data centers as literally the backbone of the AI economy. And this is why the second major sector seeing huge investment that we're going to cover is power grids and electrification, as huge data center projects housing all these computers will consume an enormous amount of energy, creating huge demand for utilities and infrastructure projects. So investors are piling into the ETFs that directly invest into the companies building this out globally. And this leads us on to the third and final sectors that we will cover: nuclear energy and commodities. Why? Because nuclear energy and critical commodities like copper and silver are essential to sending the energies to the power grids to power the data centers. So by the end of this video, you're going to have the knowledge to invest in the best ETFs that have exposure down the supply chains. So with that said, let's get started by looking at the first opportunities: AI infrastructure and semiconductors. All right, everyone, warm welcome. Super excited to be talking about the massive macro trend that's happening right now with the AI revolution. And I really want to add so much value in this video to offer you a helping hand so you can understand the exact sector seeing huge record-breaking amounts of investments. I'm going to be breaking down the ETFs that you can get exposure to, and I'm also going to show you some of the returns that are currently happening in the markets. We're only in May as of this recording, and some of the sectors that I'm going to show you are already up 50% or more, and we're not even halfway through the year. So if you can get in early and you can get into the ETFs that are putting, when I say hundreds of billions, if not trillions, into the AI infrastructure, and I'll be showing you some real data and some real numbers, you could be positioned for a massive trend, which is already underway. All right, so what we're going to be looking at is the AI revolution is literally rewiring the global capital markets, okay? $2.5 trillion with a T, guys, is going into the AI infrastructure in 2026 alone. $2.5 trillion. $1.37 trillion of that is going into the three sectors that I'll be showing you. Okay, and this build out is expected to last up to 10 years, but the money is going to be being piled in the next 3 to 5 years. So why this is so important is because if you can get positioned early, you will be literally in the beginning, still the beginning innings of a massive super cycle of investment. And this could take care of you for many, many years to come if you get in early and allow those returns to compound in your investment accounts. And that is the goal that we want to achieve. So this is incredible. And what you need to understand is that governments around the world are competing to build out the infrastructure. Now, this is what's different. This is not just like the United States versus China, who are trying to be the leaders in the AI supremacy race. This is global because no government wants to be left behind. Europe's trying to now throw money at AI in the infrastructure because they don't want to be left behind, because the United States and Asia at this moment in time, they're leading the race. They're the ones building the semiconductor chips. They're the one building the manufacturing chips, and the world governments are literally competing with each other. So when you have a global race to dominate an industry, you can really capitalize on the money flowing into this sector. This is like getting invested into the oil industry when oil was first discovered, okay? Or for an example, what else has happened recently? Maybe the internet, okay, at the very beginning stages, or when computers first came out. Imagine being able to buy Apple when they first released the first computer. It's literally that kind of situation we're in. So I want to add a lot of value to you in this video and really help you be able to identify some really good investments that you could do some research on and then build your own portfolio and get stuck in immediately. That is why I created this video. Okay, so 3 sectors, trillions in flow, 1 framework, and that's what we're going to cover in this video. So as I said in the introduction, the AI infrastructure is the #1 sector that's seeing the most investment. So we're going to be looking at semiconductors. These are the companies like Nvidia who are manufacturing the chips that run the language models to run AI. So ChatGPT, Claude, all of these AI models, they use chips, and the semiconductor companies manufacturing these chips are seeing huge investment. I'm going to show you an ETF that's already up 50%, and we're only in May, so we're not even halfway through the year. So by the end of the year, these are sectors going up 100% a year, okay? And if you can diversify across multiple sectors to bring down the risk in a balanced portfolio, huge returns. All right, so we have to understand that the semiconductor companies and the data centers, okay, which will be housing all of these computers to run all of these infrastructure build out, this is the backbone of the AI economy. And this is what we'll be looking at first. Then we're going to look at power grids and electrification, which has to power these data centers, okay, and we'll be looking at why the grids are having major investment because they have to be upgraded to power all of this energy. And then there's the energy sources that are going to be used to power the electricity and the power grids. Okay, so nuclear energy has seen huge investment. And there's certain commodities which are key to the components, like copper and silver and strategic metals, that are crucial to building this out. So if we can get investments across the supply chain, we are going to be laughing and we're going to be in a very good position moving forward. The smart way to play this, why ETFs are going to beat trying to pick individual stocks. Well, if you're going to try to find individual companies, what if the company doesn't produce the earnings that the markets are expecting? Because the only thing that drives up the value of the stock market or an individual company is the earnings expectations. If companies continue to grow their earnings, the stock will keep going higher or the markets will keep going higher. But if you pick the wrong stock and it doesn't meet the market's expectations for earnings, the stock will get killed. Okay, so if you try to pick individual stocks, you run the risk of being wrong. Okay, it also requires deep fundamental research into a specific individual company, and that takes a lot of time. You're exposed to just one position. If it goes wrong, it's going to kill your account. Okay, and you'll be more emotionally tied to the performance of that stock because you're praying that it's going to go in your direction. Okay, and if the earning again misses, or the CEO resigns, or anything happens that changes the market's expectations, you run that risk of being wrong. Now, if you buy an ETF is an exchange traded fund. It will hold a basket of companies. So why try to pick one company, let's say in the semiconductor industry right now, which is seeing huge investment, when I can own 100 of the semiconductors? So my risk is diversified. So if 10 companies fail to make money, who cares? The other 90 companies are in a profit and their share prices are going to rise. And that will mean the value of the ETF will rise. So diversification removes the risk of having to just pick one stock and being wrong. Okay, so you're diversified. You have wider exposure. Okay, there's less risk and it is very cheap to buy ETFs. The percentage costs are very low. Okay, so you can hold more of your money. So ETFs are the way forward, and that's what we're going to be covering in this video. Let's look at the AI infrastructure and the semiconductors. The largest capital expenditure cycle on Earth is happening right now in this sector, and it's already accelerating. All right, as I said to you, Meta, Alphabet, and a few other companies, they are literally investing 750 billion this year alone between 4 companies in this exact sector we're talking about right here. Because AI is not a hardware story, it's not a software story, it is a computing story, right? Which basically means that big tech are deploying, again, whoops, sorry for the typo here, 750 billion annually into building out the infrastructure, the data centers, okay? And the companies that manufacture the data centers, that manufacture the chips that will power the language models that will be used in the data centers are seeing the biggest investments, okay? So what I'm going to show you now is that if we can invest in the semiconductors, so this is like buying basically companies like Nvidia, which is now the most valuable company in the world because there's so much investment going into this sector, we can be in the beginning innings of an incredible super cycle. So we want to be in the semiconductor companies that manufacture the AI chips. All right, so let's look at the 2 best performing ETFs in the semiconductor space, which I think will be of very good interest to you guys. Let's look at the iShares Semiconductor ETF, which is the ticker SOXX. Okay, this so far, as of the 21st of May, so we're only 5 months into the year of 2026, this is already up 70%. 70%. It was up nearly 80% a few days ago. This is the demand for semiconductors. So you are diversified across a multitude of semiconductor companies, and it's up 70%. We're not even halfway through the year. This will probably go up another 70, maybe even more. So we're looking at 150% by the end of the year, if it keeps up with the pace that the markets are investing into this semiconductor ETF. So think about it. What pushes up price? Massive levels of investment. Okay, so we can see that these are incredible returns. We also have the second ETF, which is the Van Eck, I think it's called, semiconductor with the ticker SMH. This one is up 50%. Again, 50% returns compounded over long periods of times. Incredible returns for investors. So you can see that the semiconductor space is seeing huge record-breaking demand at this moment in time. And as I said, this is the build out that has to be done by the semiconductor companies, because they're building the chips that run the language models that run AI. So this is the backbone of the economy. So they're two ETFs that you could potentially invest into. And at the end of the video, when you get the ebook download, we have even more ETFs for you to choose from. So they are the first two that I wanted to show you in this video. All right, so now we can turn our attention to the data centers. Okay, we have a data center ETF, which is the ticker DTCR, which is the Global X Data Center and Digital Infrastructure. This is up since the beginning of the year, 40%. So again, fantastic returns for investors that have put their money into this data center infrastructure ETF. And we have a second ETF under the ticker SRVR, which is a Pacer Data and Infrastructure ETF, which is up 18%. So less than this ETF. It was up about a week ago by around 25%. Again, still fantastic returns. We're only halfway through the year. So again, if you're building out your portfolio and you're diversified across different areas of the AI infrastructure build out, then you can still make phenomenal returns with data centers. And there's more options, again, which will be available with the ebook download. So again, data centers and semiconductors in the AI infrastructure and semiconductor sector that we're looking at to start with. You can see there's fantastic returns if you understand the right ETFs to get invested into. So we can see that the numbers tell a story. 750 billion between just 4 companies in the United States are going into semiconductors and data centers. Okay. Now in the United States, in the United Kingdom, it's being predicted that up to 6% of electricity is going to be consumed by data centers alone. All right. And over the next decade, $7 trillion is projected to be spent as countries around the world build out the data center infrastructure. Okay. So what this essentially means is there's going to be a huge demand to upgrade the power grid and electrification. All right. Because AI needs the energy to run all these language models, okay? Because the demand is only getting bigger. Think every day how many more households are now using ChatGPT, Claude. It's only a matter of time until everyone is using AI, the same way everyone now uses the internet compared to when it first came out, or mobile phones when it first came out, or cars when it first came out. This is going to take over the world. So governments know they have to invest early in upgrading power grids and getting the energy flowing, okay? So every data center consumes an extraordinary amount of electricity, and the global grid system, okay, which much of it is decades old, was never built for this new demand which is coming because of AI. So governments are now funding the largest grid upgrade programs in modern history. Okay, so we have 2 ETF tickers which I'm going to be covering for the power grid and electrification sector of this AI build out. We have the first ETF called Grid, which is a First Trust NASDAQ smart grid ETF with the ticker, which is simply Grid. And we can see since the start of the year, we are looking at 23% returns in 5 months, which is fantastic. A week ago, it was up 30%. So if we keep up these gains for the rest of the year, we could be looking at 50% returns. Then we also have the IFRA ticker, which is an iShares US infrastructure ETF. This is up around 15%. Literally last week, it was up around 20%. So still on track for potentially 40% returns by the end of 2026. So again, great returns in these 2 sectors. Less money is going into the power grid and electrification than the semiconductors and data centers. But again, we want to build a diversified portfolio. We're not putting all our eggs in one basket. We want to be invested across the supply chain. So that's fantastic returns already for investors who have already put their money into these ETFs. And this is how you can start to build your portfolio and be diversified across the AI build out. Okay, so now we're going to have a look at the nuclear energy sector. And we're going to look at the key commodities which are used to get the electricity from the nuclear stations to the data centers. Okay, so we're going to look at copper and silver, which have been absolutely surging in the past few years. Okay, so nuclear energy is seen as one of the cleanest ways to get energy to power this AI revolution, because there's going to be a lot of demand on the grid and infrastructure to meet this demand in energy to power the data centers. And nuclear is the cleanest way to get this demand without burning fossil fuels. Solar and wind just don't produce enough energy. So there are specific ETFs that you can look into, which we've highlighted here. Okay. However, the way to play this and get much bigger outside returns is going to be looking at the commodity sector. All right. Because commodities have been surging. Copper is essential to the AI data centers, electric vehicles, power grids, even military systems, and the semiconductors. It is a key commodity. Silver is also critical for solar panels and the electronics within this supply chain. So structurally, there are supply shortages that are developing in the world. The demand for copper and silver literally cannot be met by the mining companies. So I'm now going to show you that the best way to probably get outsized returns, if you're thinking about building out your own portfolio, is to go into the commodities more than the nuclear energy, because nuclear stations take a very long time to be put together and built, and investors are more keen to get their returns in the commodity sector. So let me take you over to computer screen again, and I'll show you the returns for copper and silver, which have been scary. Okay, so we're going to look at the silver mining ETF, which is under the ticker SIL, and we're going to look at the copper mining ticker, which is under the ticker COPX. So if you're buying either one of these ETFs, you're getting exposure to the companies that are mining silver, and you're getting exposure to the companies that are mining copper. Okay, so we can see, for an example, last year, silver was up around 180% in 1 year. Copper last year was up around 100%, still fantastic returns. And the only reason these commodities have had a bit of a pullback in 2026 is because the war between the US and Iran is creating inflationary pressures, because the Strait of Hormuz is shut down. And if the Federal Reserve and other central banks globally have to tighten interest rates to try to stop inflation expectations getting out of control and consumers demanding higher wages, and then we have an inflationary spiral again, they're going to raise interest rates to try to cool down spending and cool down demand. And that obviously weighs on the demand for commodities. Commodities are cyclical in nature. So if you have a situation where there's economic growth slows down, the demand for commodities slow down. So the mining ETFs will obviously have less demand. However, as soon as there's a ceasefire and this war goes away, you can expect this kind of trend to continue. Now, silver's been on an absolute tear higher over these past 2 years. 400% in 2 years is unbelievable. And remember, there's not enough silver and there's not enough copper to meet the demand in global investment into the AI infrastructure build out. So we are projected to see silver and copper prices continue to surge higher. So these are two crucial commodities that you'd want to pay close attention to if you're going to build out your own portfolio. And again, in the ebook download, there's other ETFs with more commodity ETFs that you can invest into, that you can do some more deeper research on. All right, so we've had a look at the commodities, copper and silver. We've had a look at nuclear energy, power grid and electrification, and we looked at the semiconductors and the data centers. Now, understanding the ETFs, which are going up in value a lot, is great. That's fantastic. However, it's not enough, because we may know the trends, but we need to understand the bigger macro forces at play. Because I just showed you that silver and copper prices have been coming down because of the war between the US and Iran, and that's affecting the market's macro outlook of the global economy moving forward. So what will make your investing a lot more secure, okay, with more confidence, for you to have more of a framework to understand what is expected to come moving forward and where we are now, is to have a free training on the macro mechanic framework that professional investors use, and which I use to invest my own money in the markets. And this is using a rules-based macro system that essentially allows you to learn how to track certain macroeconomic data that literally predicts the stock market's direction with an 85% certainty. So it will predict what is the expectations for economic growth, what is the expectations for inflation, what is the market's expectation for interest rates and central banks. You can track this in real time, and this framework will make you a macro mechanic, sophisticated investor. This is how you take your investing to the next level. You also need to learn how to build yourself a well-diversified, low correlation portfolio. And what exactly does that actually mean? Well, when we're investing, the key is for us to build a portfolio that is diversified across sectors, okay? So we can eliminate being concentrated in one sector, like just semiconductors, for an example. However, even if we are invested in these sectors I've explained to you, we are still exposed to cyclical commodities and only being invested in the AI theme. We need to be invested across multiple sectors, okay, multiple asset classes to diversify your portfolio so you can still make massive returns, but with lower risk. So you need to be invested into other sectors of the economy and asset classes. And this is what I would like to invite you on a free training video so you can learn this, so you can understand how you can have low correlation investments inside of a well-diversified portfolio, okay, which can allow the power of compounding to work in your investments. Because for some of you watching this video, you know, you have saved up money, you have money you want to put to work, but you've worked hard, okay, and you don't want to gamble away the money that you have managed to save up and invest in yourself. Whether you're a business owner, you're an entrepreneur, you're a high-paid professional, you want to be able to invest with confidence that you understand what's likely to come moving forward. So if there are bouts of volatility, your portfolio is structured in a way where the portfolio is so uncorrelated that all the assets don't react to the same news events. So you don't emotionally react to your balances going from profit to losses because you are diversified. So your portfolio grows at a more steady and secure pace. Because if you can do this correctly and you can add multiple assets, you can reduce the volatility of your portfolio by up to 80%. 80%. So while other investors are concentrated, and let's say something happens in the news and their investments go down by 30-40%, for some of you that is an emotional situation which you won't be able to stomach. But if you're diversified, your portfolio may go down by 10-12% because different assets perform differently in different environments, and they're not all driven by the same factors. And what this essentially means is you could have a number of assets in your portfolio, just 6 different assets, and you literally could bring down the volatility of your portfolio from, let's say, fluctuating by 35% to now only fluctuating by like 10%. But you're still taking advantage of the sectors going up 50, 60, maybe even 100%. This is the secret to investing. You want risk-adjusted returns. You want to take the least amount of risk to get the maximum amount of returns, because what you don't want to do is be reacting emotionally to price swings, news events that you don't understand how to interpret. So what you're going to learn on the free training is how do you interpret the macroeconomic data, and then how do you build a portfolio with low correlation, diversified, for risk-adjusted returns. And that is the training that I would like you to get next, and I'm excited for you. And the free ebook download is going to be on the training page. So just head over to macromarkets.co.uk for the free training video. I'm excited for you to learn more about building your own portfolio. And if you don't want to build your own portfolio, no problem. Just go ahead and go get your free ebook download at the website I've just said. So thank you for watching, guys. I appreciate you taking your time. Plenty more videos to come. And I hope you enjoyed this educational video on how to invest into the AI, data center, commodities, electrification build out. Thank you for watching.